In a hard market, that's when the average producers are separated from the best producers. The best producers keep growing like nothing's happening. Average producers, they'll tell you about how hard the marketplace is and how impossible it is to do their job now. So, if you're one of those people that is struggling with renewals, keeping your clients and rate increases, this video is to give you the strategy that I use to keep growing even when the marketplace feels totally unwinnable. I'm Daryl Henry, and I help business owners navigate risk and build long term insurance strategies, not just shop rates. So, the first part is you need to be the obvious choice in a specific space. If you're one of many, then you're going to get devoured by the pack. But if you are the person that people go to when things get to be the hardest, when it seems totally impossible to get what you need, that's the person that everyone flocks to, even in the most difficult markets. You can see this in public markets, in the stock market. When the stock market is having a hard time and the economy is having a hard time, it's the biggest and strongest that grab more market share. It's the Costco's, it's the Microsoft, it's the Apples and Nvidias. Those are the companies that even when things are incredibly difficult and their peers are struggling, those companies, they just keep growing. You can do the same thing as an insurance broker if you are known as the obvious choice in a specific niche. Because when your peers are having a hard time figuring out what to do, you're going to have all the answers, and the client and the marketplace will know it. So be the obvious choice. The second key to navigating difficult marketplaces is to set expectations early. Clients don't hate rate increases. They don't love them, but they don't hate them. What they hate are surprises. They hate being told at the last minute you're going to be paying 30% more and coverage is going to be restricted. So try to get out in advance. I aim for at least 90 days in advance with a marketplace report to set expectations by line of coverage on what they should know the marketplace is doing by line for price increases and coverage restrictions. And if I can put it in context of other similar organizations, I'm going to try to do that too. Because if I can eliminate the surprise in the marketplace, people will generally accept the renewal terms much better. People can be reasonable. They know that there are a limited number of companies and the marketplace is the marketplace. What they don't like is to feel boxed in. The third key to navigating difficult markets is to empower the client. So if you've prepared them to know what's going on in the marketplace, the next thing to do is to give them options and help them understand what is available and where. When you empower people to make decisions, they don't feel boxed in. It's once again, people, they don't mind that the insurance marketplace is going to be charging more money. They don't love it, but they don't mind that costs go up. They don't mind that coverages get harder to find. What they really don't like is feeling boxed in and feeling like they have no power over the situation. So, if you can come in with multiple options or tell them what is happening in the entire marketplace and what they could get and where, they're going to feel like they can take control of the situation. And if they feel like they are able to take control and they are not being told what they can get, they are going to be much more likely to accept the solution because it will be their solution. So empower your clients to make decisions. Don't tell them what to do, empower them to make decisions. Hey, if this is helpful so far, do me a favor, hit the like button. It helps this video reach more producers that are trying to find ways to navigate difficult insurance markets. And if you don't want to miss the next video, hey, make sure you subscribe so that it pops up in your feed. The fourth key to navigating difficult marketplaces is keep in mind you're going to lose the way that you win. So if you're winning by quoting and you're winning by offering price savings, then that's how you're going to lose your clients too. They are going to shop around and they are going to look for better deals in the open marketplaces, and when they can find it, they're going to leave you. Whereas if they choose you based on relationship, if they sign up with you by broker of record letter, that means they have chosen you as an individual to help them navigate the marketplace. They are going to be much slower to leave. And if they are choosing you for your expertise in a space and you are an obvious choice because you know the market, you know the carriers, you know the underwriters, you know what they need, you know how to get it, it's going to be much harder for people to leave you as a broker. So just know that if you are leading with price, you're going to lose by price. And if you're leading by quoting, you're going to lose by quoting. So just keep that in mind so that you know which games you're playing. The fifth key to navigating difficult markets is keep a long view. It's going to get hard. It gets hard for everybody. You're going to lose clients. It's inevitable. Even the best lose clients. I've come to grips with the idea that I'm going to lose at least one key account every year that I didn't see coming, that I did everything right on, and I look back and think there was nothing I could have done better, but they left anyway because that is the nature of the business. We are going to lose sometimes. You are going to lose sometimes. It's not because you necessarily did anything wrong. Sometimes you can do everything right and still lose. That doesn't mean that you need to change everything that you're doing, change your sales system, your philosophy, your market. That's not it. Keep in mind that what you're trying to do is appreciate your book of business over time. You're trying to make it grow over time. So even if you take some hits, as long as you're adding business so that you're continually growing, that's still going to help you get where you need to go. And in hard markets, if you're getting large rate increases, your book's probably going to grow even faster than what you're losing. So keep a long term view. Don't get too myopic and focused on individual losses because what you're trying to do is grow your overall book. The sixth key to success in difficult markets is to trim the fat and serve your top 20%. You can only handle so many customers as a broker. And the way that you will end up feeling bogged down is not by the amount of revenue that you generate. It's going to be based on the number of clients that you're working with and how spread out you feel. So, one of the keys to thriving in a difficult market is to be extremely efficient, more efficient than your peers. Most of your peers are trying to do a lot of different things. Whereas if you focus on doing one thing way better than everybody else, you are going to continue to thrive. So, the way you do that is you cut out your 10%, the bottom 10% of your book, your worst customers, and you focus almost exclusively on keeping your top 20% of clients. What you'll find is from Pareto's principle, the top 20% of your clients are going to generate 80% of your book of business, which means if you focus all your energy there, you're going to be fine. You're going to lose some clients because we all lose clients, but as long as you're letting the ones go that are not driving your bottom line, that's fine. Your book of business is going to continue to appreciate. So keep focused on the end goal, which is growing your overall book of business. Look, hard markets really separate who are average producers from who are the best producers. And it's because the best producers are focused on doing one thing exclusively and doing it better than everybody else so that their systems are better. They're known as the obvious choice. They're letting the clients go that are not helping them grow their overall book of business. They're not getting stuck on individual losses. They're staying focused on growing their core top 20% of clients that are pushing up their overall book of business. Stay focused on that. If you can do that and think strategically about where you're going and where you want to be in 5 years, every marketplace is an opportunity, regardless of what the underwriting guidelines are. And in fact, I would argue when underwriting guidelines get difficult, that's when there's the most opportunity because that's when there's the least competition and that's when the people with the least amount of knowledge, they have no idea what to do. Hey, look, if this is helpful, please hit like and subscribe. It helps other people like you find the content. If you've got questions, drop them in the comments for me. As always, thank you so much for watching. Please go build something great.